Hello, Owen here, and today we're going to look at completing a tax deduction card. Now the first thing we have to do is enter the name, and in this case we're told it's Michael Ryan, and Michael's status, we should enter that there. Michael's status is single. Now because Michael's status is single, what we first have to find out, the standard rate cut-off and the tax credit. Now you'll have to look up your notes on this. The tax credit for a single person in a year is 32,800, and if you find out that, divide that by 52, it's 630.77 a week. Now what that means is that he will pay on earnings up to 630.77 a week. He will pay tax at 20%. Earnings in excess of 630.77 a week, he will pay tax at 41%. Now likewise we have to find out his tax credit. Tax credit for a single person is 1650 for the single person, and another 1650 as a PAYE tax credit, bringing the total to 3,300. And again, if you divide that by 52, you'll find that that's 63.46 a week. So in other words, that if his tax liability will be 63.46 less from his gross tax each week. Now we're given that Michael is earning €600 a week, so we put in €600 here. Now this is his cumulative, which we are going to call year to date, as it is easier, and in the first week he has earned 600, so his year to date is obviously going to be 600. Now I should have said, and maybe I should have said this earlier, what I find very handy is that you can put in the cumulative or year to date standard rate cutoff and the cumulative tax credits. You can put that in. So that is the figure. Standard rate cutoff is here, so we're just going to put that in there. We'll put it in green, and 2 weeks will be twice that, three weeks 3 times that, and 4 weeks 4 times that. You can always fill those in. And likewise we're saying the tax credit, look, after 1 week to 63.46, so we're going to put that in 63.46. 2 weeks twice that, 3 weeks 3 times that, and 4 weeks 4 times that. So that is, I think it's very helpful to put those in at this stage anyway. Now, so what we have to do now is we have to find out what tax he's liable for at 20%. And how you do this is you say, has he earned in excess of the standard rate cutoff? No. So the answer is that it's going to be what he has earned multiplied by 20%, or 20% of that. And that in this case is 120. Now, he won't pay tax at the 41% because he doesn't have earnings in excess of that. So again, that's just going to be 0 there. So his cumulative, his gross tax for the week is, well, it would be that plus that, but in this case it's just 120, as you can see. No, but that's his gross tax, but he has 63.46 a week tax credit. So what he will be liable for is 120 less 63.46, and that works out at 56.54. So naturally this is the first week. He owes the taxman €56.54. So how much is he going to pay the taxman? He's going to pay the taxman 56.54. That's how much is going to be deducted from him. He's not entitled to any refunds, so that's going to be empty. USC deducted this week. We'll do that off sheet. Is that okay? We're just going to put in an amount here anyway. We're saying 28.90, and he's not going to get any USC refunded. That's going to be blank. His social insurance, or weekly, we're just saying this is what rate he's on. You could just tick that off, but I'm just putting in A1 anyway. And the employee's rate, again you do this off sheet, it's 18.92, and the employer's PRSI, you're doing that off sheet as well. And then the total is just what the employee pays and what the employer pays. So we can just fill that in. Now his net pay is going to be his gross pay less what tax he pays, less what tax he's deducted this week. We said less what tax he's deducted this week, less his USC deductions there, less his USC deductions, and less the employee's PRSI deductions. So again there it is his gross pay, his weekly gross pay, less tax deducted, less USC deducted, and less PRSI deducted, the employee's portion of the PRSI. So that will give him 495.64. So you can replay that if you're not very clear on it. Next week, or week number 2, he also earned 600. So year to date, he has earned 600 plus 600 this week, and that's going to give him a total of 1200. Now you do it, you calculate it each week on a year to date basis. So he's earned year to date 1200. The standard rate cutoff is in excess of that. It's 1261.54. So he will still be paying tax just at the standard rate, and it will be 20% of that. So 20% of that would be 240. If you'd like, just twice the week before, but that's the way you'll multiply that figure there by 20%. He won't have any liability at 41% because he doesn't earn enough money. So his cumulative tax before taking tax credit into account is 240. So we'll fill that in there. Now he's liable for €240 tax, but his cumulative tax credit year to date is 126, so it'll be 240 less the cumulative tax credit, and if we see there, that is 113. Now, so how much tax will he pay this week? Always remember that you're never going to owe the taxman. You're going to pay the taxman what he is due every week. So there, that is how much the week before that was due, and you have that amount paid. So this week you'll owe him a total of €113.08, but you've already paid him that amount. So it's that less that is how much you are going to owe him this week, and that is $56.54. You're not going to get any refund this week. You're going to, because you've paid him tax. And again, USC, you do that off sheet. You can fill that in. You can fill that in there, and we may as well change that to red there, as it said deduction. USC refund, there won't be any refund. Again, the stamp is an A1 stamp, but we needn't get hung up over that. Now in the next column we insert the employees PRSI due that week, and again it's 1892, and we've calculated that off sheet, as have we with the employer's PRSI. Then we add the two of those to get the total, and his net pay for this week, same as previously, is his gross pay less the tax paid, less USC paid, less PRSI paid. So his net take home pay is 495.64. Now week 3 is going to be a little different, because we're told that Michael Ryan is sick on week 3, and of a liability of 38 hours, he only works 8 hours of that. So you divide his 600, his weekly pay, by 38 to get the hourly rate, and multiply that by 8 then to see how much he earns in the week, and that comes to 126.32. And again, to find his gross pay year to date, you add that to that, and that should give you 1326.32. Again, he has earned less than the standard rate cut-off point, so his liability at 20% year to date will be that multiplied by 20%, and that's 265.26. He's not going to owe anything at 41% he hasn't earned enough money, so that's going to be 0 there. And his gross tax is the 20% plus the 41%, and that's of course going to be the same as just what he earned there. Now, his gross tax due year to date is 265.26, but his cumulative credit, or his tax credit year to date, is 190.38. So we take that from that, and that gives us his net cumulative figure, which is 74. Now this is where it is a little bit different. So year to date he owes the taxman €74.88, but he has already paid the taxman €113.08. So now the taxman is going to give him a tax refund this week, and the refund is going to be 113 less that. So the figure here we can see is going to be 0, and here we can see the refund there is 38.20. Again, it's that less that. Now his USC deducted here, we'll just put that in, and again that's off sheet. He's not going to pay any USC refund here. He's going to get a small refund. That is done off sheet as well on a cumulative basis in 2012. That's the first year. And now here, generally you could just tick this, but we're putting down the stamp. He's an AO stamp now, just a little change. His PRSI contribution there is he's not earning enough in the week to pay any PRSI. His employer, however, will still pay some there, 537. So the total PRSI for the week will be what his employer pays. Now, just to get his net pay now, again a little bit different. It's going to be his gross pay. It would be less any deductions such as tax, USC, PRSI, but unusually this week, it isn't that he paid 0 tax, but he got a tax refund. He got a tax refund, and we should show that in green just for a refund. So his gross pay plus that, plus he got a USC refunded, so that will be what he will his net pay is this week. We put it in there, 168.77. And now back to week 4. Again in week 4 he earns 600 euros, so we'll put that there. Now to get the cumulative or year to date gross pay, you add that to that, add that to that, to give the gross year to date pay, and that ends up at 1926.32. Now notice there the cumulative standard rate cutoff, he hasn't exceeded that, so year to date all of that will be at 20%. That works out at 385.26. He won't pay any tax at the 41%, 0, so his cumulative gross tax to date will be that plus that, which of course is 386.26. Now his cumulative tax credit is 253.85, so we take that from that to see how much tax he owes year to date, which is 131.42. Now from the previous week he has paid 74.88. This week now he owes 131.42 year to date. So take that from that to give how much he owes here, which is 56.54 there. Again, he is not going to get any tax refunded this week. His USC, which is calculated offline, is 28.90. He won't have any refund of USC this week. His PRSI stamp, if you like, his stamp is an A1 stamp, and his PRSI contribution this week is 18.92. Again, that's calculated off sheet, if you like. Well, what it is the first 127 is exempt, and he pays on the balance. In the new year, that's going to change. It'll be all liable at the 4%. Now his employer's PRSI, we put that in there, 41, again calculated off sheet, and the total there we put that in. So how much will his take-home pay be? His take-home pay will be his gross weekly earnings less his tax deducted of 56.54, less his USC payment, less his PRSI, and that will give him 496 or 495.64, the same as week number 1 and number 2. So that's how it's done, and we'll have further videos just to show USC, etc.